Hello, all. Good evening and welcome. I'm Mamta Rawat from the Corporate Communications team of CareEdge. I welcome you to our discussion today on home textiles in India, on a roll or at a crossroads. We sincerely appreciate your taking the time out to join us for this webinar. We would like to welcome our esteemed guest speakers for today. Mr. Ankit Madhwani, CFO at Phase 3 Limited. Mr. K. Muralidharan, CFO at Indo Industries Limited. Mr. Sanjay Gupta, CFO at Welspun Living Limited. This session will be moderated by Pulkit Agarwal, Director at CareEdge Ratings. We'll commence the session with a presentation by Arti Roy, Associate Director and Group Head at CareEdge Ratings. This will be followed by a panel discussion and a Q&A session. In case of queries, participants are requested to key in their panel. We will take up your queries at the end of the discussion. Now, may I invite Arti Roy to make the presentation.
Thank you, Mamta. Good evening, everyone, and welcome to today's session on India's home textile sector. While FY25 brought its share of challenges with ongoing global uncertainties, evolving trade dynamics, and fluctuating demand patterns, the industry showcased resilience. Backed by healthy revenue growth and steady operating margins, along with rising export demand, continued policy support, and expanding global access through FTAs, the sector remains on a strong footing. Driven by rising demand in key export markets, that is, US and UK, and supported by the Government of India's strategic initiatives, which includes the FTAs, the free trade agreements, and targeted support for the textile sector, the home textile industry is poised for sustained growth in FY26. The expanding network of FTAs is unlocking new opportunities by reducing the trade barriers, enhancing market access, and making Indian products more competitive globally. Now, these developments, along with the focused government support, are expected to drive the long term growth, encourage market diversification, and boost India's standing as a leading home textile exporter. However, uncertainties surrounding the recent US tariff changes remain a key variable, and their full impact on export volumes or pricing dynamics is yet to be seen. Nevertheless, given the industry's strong balance sheets and robust financial fundamentals, the overall credit profile is expected to remain resilient, supporting continued investment and operational stability to Indian home textile players. We will begin today's session by sharing a brief overview of the global and Indian home textile market, highlighting the industry scale, recent developments, and India's evolving role in the global trade. Following this, we will walk through the sales and profitability trends of major players to assess the financial performance trajectory. We will then move on to the key policy initiatives taken by the Government of India that are actively shaping the sector. And after that, we will also highlight the long term structural growth drivers supporting the industry's expansion. And finally, we will conclude with a discussion on the near term headwinds and how the sector is navigating through these challenges. To gain insight into the home textile market, it's important to first consider the broader textile industry and its various segments. The global textile market was valued at USD approx 1000 billion in calendar year 24. The global home textile trade exhibited a modest but fluctuating growth trajectory. It increased from USD 50 billion in calendar year 17 to a peak of USD 60 billion in calendar year 21, driven by the strong demand we saw during the pandemic, when consumers focused more on the hygiene. However, this momentum moderated, and that was post-pandemic, with trade falling to USD 56 billion in 2023, indicating normalization of demand and inventory correction across key markets due to the global conflicts affecting the trade and input cost. While long-term fundamentals remain intact, the near-term trend points to volatility driven by both macroeconomic and the behavioral shifts. CareEdge expects that the overall textile market will still experience growth, and is expected to achieve a CAGR growth of about 3.5% until 2030. Moving to global home textile. In calendar year 24, the global home textile exports saw a modest growth, signaling post-pandemic market stabilization. Bed, table, and kitchen linen exports rose to about USD 24 billion, supported by the steady demand and cautious inventory restocking. Carpet held at about like USD 18 billion, while curtains and furnishings showed minor shifts. Blankets and travel rugs dipped slightly but stayed about pre 2020 levels. Following the 2021 surge, the market has been normalizing amid a reduced overstocking and easing supply chain pressures. As demand stabilizes and cost volatility moderates, the sector is poised for gradual and sustainable growth. Next, let's examine the evolving dynamics of global exports and imports under the home textile. In calendar year 24, China remained the top global exporter with USD almost 24 billion, reflecting a strong manufacturing scale and the global trade linkages it enjoys. India ranked second, with exports rising to USD 6.5 billion from USD 5.7 billion in calendar year 23, marking a rebound after 2 years of decline. Now, this recovery was driven by improved cotton cost dynamics, plus the China plus one sourcing strategies adopted by the global markets, which boosted India's share in the key exports, especially in the US. On the import front, the United States continues to be the largest home textile importer, with calendar year 24 imports at about USD 13.87 billion, which was higher than the previous year, but still lower to the 2021 peak. Germany followed at 3.5 billion, maintaining a steady trend. Other countries like UK, France, and Japan recorded about USD 2.5 billion during calendar year 24, reflecting continued demand from developed markets despite the broader economic pressures. India's home textile exports to the US rose about like 25% over the past 5 years, from USD 3.09 billion in 2020 to USD 3.87 billion in 2024, while exports peaked at USD 4.5 billion in calendar year 21. The recent 6% growth signals improving cost dynamics and the demand recovery. China's exports to the US in last 5 years grew modestly up to 4% from USD almost 4.99 billion to USD 5.2 billion. Again, a new 30% US tariff on the Chinese textile, which was announced, is expected to further shift the sourcing. India, with a lower 10% tariff, including the base and growing buyers' interest, is poised to gain market share in the US. Now, India is the world's second largest textile exporter and a key global player across segments. The industry contributes 2.3% to GDP, 13% of industrial output, and 12% to total exports. India's domestic textile and apparel market is on a steady growth path, expected to reach USD 147 billion by FY26 from USD 138 billion in FY24, reflecting a 7% growth. The sector has maintained a 5-year CAGR of 7%, highlighting sustained demand and structural strength. Apparel leads the market, projected at USD 108 billion for 25 and expected to be about USD 180 billion by FY31. Home textiles are set to grow from USD 11 billion in FY25, expected to reach about like 16 to 17 billion by FY31. Now, this growth is fueled by the rising incomes, urbanization, lifestyle shift, and the government support through various schemes, the infrastructure boost, and the skill building initiatives taken. If we refer to the pie chart on the right, it highlights the major home textile articles exported from India. Cotton terry towels dominate the category, followed by the bed linen, cotton, and man-made fire blankets, among others. Focusing on home textile exports, the trend reflects the underlying resilience despite the recent global headwinds that we have seen. After a healthy growth phase in FY21 and FY22, with exports rising by almost 20% and 17% respectively, the segment faced a temporary setback in FY23, declining by almost 14% due to the softer international demand and the macroeconomic pressures. However, the sector stabilized in FY24, maintaining exports at almost $6 billion and is expected to register a 3% recovery in FY25. This signals a gradual revival supported by the steady demand. The consistent base and early signs of growth underline the long term potential of India's home textile industry amidst global challenges. India currently accounts for almost 4.5% of the global home textile trade, and Indian home textile exports have recorded a steady upward trend over the past 3 years, growing from almost 47,000 crore in FY23 to 55,000 crore in FY25, marking a cumulative growth of 17% over the period. Now, this expansion has been led by the strong contributions from key segments, or rather key products like bed linen, carpets, and furnishing articles. In FY25 alone, if we see, bed linen exports rose by 20% year on year, while carpet and floor covering exports grew by 14%. These were supported by factors like the stable raw material prices, inventory restocking by global retailers, and the consistent demand in major markets including US and EU. Overall, India's home textile export momentum remains strong with rising value addition, improved competitiveness, and better integration across global sourcing networks. Moving on to the raw material price trend, the correction in cotton prices has brought the much needed relief to Indian textile manufacturers. It has restored cost competitiveness in global markets. Cotton prices have moderated significantly, as we see in their peak when it was during May 2022, averaging around 150 to 153 rupees per kg in FY25. This easing has reduced the raw material cost pressures for home textile players, supporting their margins, enhancing pricing flexibility, and also boosting their overall export competitiveness. The second major cost, that is the container. So, over the past few years, the World Container Index, if we refer to, has experienced a substantial volatility, directly affecting the global trade flows, including the textile and apparel industry. However, the decline or the correction in freight cost in FY24-25 has again eased pressure on the Indian home textile exporters by reducing the landed cost, supporting better shipment planning, enhancing the delivery timelines, and enabling greater order consistency. However, volatility due to the global conflicts will remain a key monitorable going forward. Now, while India remains a net exporter in the home textile sector, import volumes have gradually increased in recent years due to structural shifts in consumption patterns and also because of the sourcing preferences. Now, the rise is driven by the increasing demand, mainly for premium, design forward products, growth in e commerce, and modern retail, and also for the need for specially or eco certified fabrics, which are not widely available domestically. Country wise, if we see, China remained India's top sourcing partner, with imports rising from USD 147 million in calendar year 23 to about 178 million in calendar year 24. Now, if we come to the performance of the top six entities, top six home textile players in India. So, the performance trajectory for FY25 reflects a balance of structural strength and cyclical fluctuations. After stagnated growth in total operating income during FY 2021 due to the global trade disruptions and pandemic, a strong recovery followed in FY22 with a 37% increase, driven by robust exports and post-pandemic demand shifts. FY23 marked an 8% decline amid the demand normalization and the higher raw material cost impact. But the sector rebounded in FY24 and the growth story continued in FY25, supported by the steady exports and a domestic demand recovery. Operating profits mirrored this trend, peaking in FY22 before moderating with margins easing from about like 15 to 18% pre FY22 to about 12 to 13% in the recent years trend that we have seen, mainly due to the rising cost and the global volatility. Similarly, on the balance sheet side, the debt coverage indicators highlight steady operational and the financial management despite the sector's cyclical nature. Even the gross current assets have grown in line with the expansion in business scale. Inventory and working capital trends have remained stable, supported by better supply chain coordination and planned inventory management. This reflects consistent operational control and effective handling of liquidity requirements, even as sourcing patterns and retailer expectations are evolving. Moving ahead, investment activity in India's textile sector during FY25 reflected consistency, with about 44 to 45 projects under implementation throughout the year. The number of outstanding textile projects remains stable at about 84 between the period of September 24 and June 25, suggesting no major project drop-offs. While new project announcements remained modest, the data underscores that a steady and committed investment outlook for the sector with focus on long-term capacity enhancement and modernization. As we all are aware, India is targeting USD 100 billion exports by FY30 in the overall textile industry. And to encourage this investment, government has been encouraging, to encourage this export, government has been encouraging through various schemes like the EPCG scheme, which allows import of capital goods at 0% custom duty rate, which helps the home textile industry to upgrade their infrastructure, enhance their productivity, and compete effectively in international markets. In August 2023, government had sanctioned the establishment of the PM Mitra Parks. These parks will feature the world-class infrastructure, including the plug-and-play facilities, the total investment of about rupees 4,500 crore. The progress has been slow, but still it has started. Similarly, PLI 2.0 is to incentivize the manufacturers to invest in capacity enhancement by offering incentives for a period of 5 years with a budgetary outlay of almost rupees 106 billion for the whole textile industry. Apart from this, India has also been strategically leveraging the free trade agreements and preferential trade agreements with their global partners to enhance the export competitiveness and strengthen the trade relationships. It has signed 14 FTAs and 6 PTAs, benefiting key sectors, including textile, pharmaceuticals, gems, and jewelry. In the textile sector, if we look for an example, the India-ASEAN FTA has supported almost about 15 to 17% increase in exports by reducing the tariffs on the critical product categories. Similarly, India is also negotiating an FTA with the European Union. Now, these agreements reflect India's efforts to expand market access and deepen integration into global value chains. The India-UK FTA agreement, which was implemented in 2025, strengthens the competitiveness of the Indian textile and apparel exports by removing the tariffs across key categories. In home textiles, the elimination of this 10% duty on bedsheet offers Indian exporters a pricing edge over the other EU peers. The FTA is expected to drive both volume growth and product diversification, positioning India as a preferred sourcing destination for the UK retailers. As a result, the UK's share in India's textile export is projected to increase from current 5.6% to approx 8% by calendar year 2026. Let's see some of the near-term challenges for home textile industry which can hinder the growth. The global home textile industry is increasingly exposed to the growing intensity and spread of the geopolitical strife. To begin with, the Russia Ukraine war remains unresolved and continues to affect the energy prices and European trade routes. Additionally, rising US China tensions, recently accentuated by the reciprocal tariffs and restrictions on the sensitive sectors, are forcing major retailers to rethink their supply chains and vendor diversification strategies. These developments have led to delayed shipments, higher insurance premiums, and logistical uncertainties, ultimately increasing the cost of doing business. Over time, prolonged instability may drive brands to reduce inventory levels or slow expansion in the new geographies, thereby dampening the global home textile trade. On the raw material side, the volatility, particularly in the cotton and polyester, which has been volatile due to the erratic weather condition, the speculative trading, and the region specific supply demand mismatches. Freight rates, as we saw through the World Container Index, surged dramatically in the early 2024 due to the Red Sea tensions and remained volatile. Although they have eased recently, any fresh disruption could again raise cost. For home textile players operating on volatile margins, this unpredictability in input and delivery cost poses a risk to profitability and the pricing competitiveness. And lastly, the major hot topic, US tariffs. Apart from India, other major textile exporters to US include China, Vietnam, Bangladesh, and Turkey. Now, except for Turkey, which faces almost a 10% reciprocal tariff, the other countries are subject to higher tariffs over and about 20, 25%, 26%. This indicates that the impact of reciprocal tariffs on India's textile sector would be relatively limited. Uncertainty around future tariff policies, especially in the context of shifting geopolitical dynamics, could impact India's export stability. The positive point here is that with stringent tariffs continuing on China and other countries, India's home textile sector is well positioned to benefit from the global buyer diversification strategies. What would be the long term growth drivers? This includes the increasing disposable incomes. As household earnings rise across the urban and the semi urban India, consumers are becoming more willing to spend on lifestyle and comfort driven products, including premium home textiles. Higher income levels enable the middle class families also to upgrade from basic bedding and curtains to better quality, design rich, and branded furnishing. India's steadily urbanizing population is also leading to a greater demand for more stylish and functional home furnishings. As more people migrate to cities, the need for well furnished homes, especially in compact apartment, is another demand driver. The rapid growth on the online retail platform has again significantly improved access to a wide variety of home textile products. Digital marketplaces allow consumers to explore diverse collections, compare the prices, and benefit from the discounts, driving more frequent and discretionary purchases. Again, with the growing environmental awareness, consumers are also increasingly seeking for more eco friendly alternatives, even in home decor. Indian manufacturers have recognized this trend and are adopting for more greener practices and processes and also adopting more greener products to align with the global sustainability benchmarks. The modern consumers, particularly the millennials and the Gen Z, increasingly value the visual appeal and ambience of their living spaces. Influenced by the social media, the home improvement content, and the lifestyle influencers, there is a heightened emphasis on the coordinated, theme based interiors. This evolving mindset is driving demand for design centric home textile products such as stylish curtains, textured bed linen, and decorative throws. And lastly, the technological advancement. These modern manufacturing technologies, such as the digital printing or the automated weaving and the smart dyeing technique, have enhanced design capabilities and improved the production efficiency. These innovations not only reduce turnaround times, but also help manufacturers cater to evolving global aesthetics and the functional requirements. With this, I conclude the presentation here. Over to you, Mamta.
Thank you, Arti, for making the presentation. Attendees are requested to key in their questions, which we will take up after our panel discussion. Now, may I invite Pulkit Agarwal to take over the session, please? Pulkit Agarwal is director at CareEdge Ratings. He's a qualified CA and holds an MBA in finance with about 2 decades of industry experience. With extensive expertise in corporate credit analysis, he leads ratings across sectors like pharmaceuticals, textiles, and metals. Over to you, Pulkit.
Thank you, Mamta, for the introduction and Arti for an insightful presentation. Good evening and a very warm welcome to today's webinar. We welcome our esteemed guest speakers for today. Our first guest speaker is Mr. Ankit Madhwani. Ankit is associated with Phase 3 as a Chief Financial Officer. He has rich experience of over 2 decades. He has held senior positions in finance with companies such as Whitewater Corporate Advisory Private Limited and Ernst & Young. Ankit is a qualified chartered accountant. Very warm welcome, Ankit.
Thanks, Pulkit.
Our second guest speaker is Mr. K. Muralidharan. Mr. Muralidharan is associated with Indo Industries as a Group Chief Financial Officer. With Indo Industries, he has been there for more than 2 decades. Mr. Muralidharan has been associated with the industry for more than 36 years and has worked across various industries like banking, engineering, textile, pharma, and financial services. Mr. Muralidharan is a finance professional and is a company secretary. He is also a qualified law graduate and an insolvency professional. A very warm welcome, Mr. Muralidharan.
Thank you.
Our third guest speaker is Mr. Sanjay Gupta. Mr. Gupta is a CFO of Welspun Living Limited and has a career spanning more than 29 years. He has led strong organizational and profit across retail, manufacturing, pharma, healthcare, and media. Prior to joining Welspun, he was a board member of Sakal Media Group and a group CFO of Vipcure School Group. Mr. Sanjay is a qualified chartered accountant and company secretary. He is also an MBA from INSEAD, France. Very warm welcome, Mr. Sanjay.
Thank you. Thank you.
So let me start today's discussion with Mr. Muralidharan. Mr. Muralidharan, we have seen India's home textile exports peaking in FY22. Post that, there has been a moderation in exports. What strategic shifts you feel are needed to accelerate growth and sustain momentum going forward?
Good afternoon to everyone. I think the post 22 FY22, you said that it has the industry's exports have moderated. There have been global disturbances as we have seen post the 22, which was a peak year after the COVID, which was one of the best years for the textile home textile industry. But at least we are the best part of it is the home textile industry is holding ground. It has been steadily maintaining its the position, and despite all those international disturbances or supply chain disruptions, we are able to still hold the export position basically. So I see a lot of this has to also come from the government support. Basically, the government has taken this textile expo has been industry has been employment generating industry. So government is keen to promote employment as well as investments in this industry. Government has also, as you pointed out in the presentation, PLI 1 scheme and PLI 2 schemes have been initiated by the government. And even otherwise, government has been coming in support by way of refunding the taxes which the industry is facing in terms of by selling the export products. So refund schemes like ROCTL or RoadTap are one which refunds the taxes and duties on the export products. So you know there are other initiatives probably which the government could further, so to say. Maybe that we are short of this ELS cotton, which is one of the which the industry imports in a larger way. India has some does grow extra long staple cotton, but the demand is more than the supply side basically. So one area where I think government has to seriously concentrate is the help grow or better output for the ELS cotton. Having said that, maybe the second major initiative which the government has started with, it started with a labor codes actually to maybe reforms, so to say, the labor reforms was initiated a few years back, but was held back by the state governments not implementing. So the major problem which the textile industry normally faces is quality labor and productive labor, so to say. We are comparing with China and all in competition, but the productivity indexes in India has been far below. Though government has been talking about the skilling the labor, or initiatives have been there, but we are yet to see the light of the day of these initiatives. So some of these initiatives, if it comes, if it takes the full circle, probably would improve the industry. The third point is that buyers have been talking about all green energy as part of our GHC reduction initiatives. Most of the buyers, have these are large buyers, so they have commitments towards green energy or reduction of GHG gases. So as a part of our contribution, we also subscribe to that view as manufacturers, Indian manufacturers. So this initiative, compliance of these initiatives needs that we also use green energy, so to say. Most of the state governments policies are not in line with the central government's views. Basically, central government probably is trying to push green energy to a large extent, but the state governments are still found wanting. So some of these initiatives, if driven from maybe the central government, not leaving things unfinished at the state level, is a real good initiative. It would really complement the industry's export growth, because customers these days are looking for a larger contribution from the industry for the green initiatives. So some of these are I think will definitely add thrust to the efforts which the industry is already making. So we wait to this is one of the demands which we have been making from the industry through our associations basically. So I hope the government hears out this and then probably make amends.
Right, agree with you, Mr. Muralidharan. Industry is holding on to its ground. Actually, the growth has moderated, but the industry has not shown a degrowth since FY22. So it's holding on to its ground. Now, coming to Mr. Sanjay, wanted to take your view on actually recent China-US trade pact. China is the largest home textile exporter in the world, and with the US-China trade pact, how do you see the things changing for the Indian home textile players going forward?
China has the highest home textile, but in cotton it's still not. So cotton India is the highest exporter, and China plus one strategy has already been playing for quite some years for playing out well for India, and in US, China's import share, which used to be as high as 70 to 80%, has come down to about 20% in towels and about 9 to 10% in sheets. And India has emerged as the leader, commanding roughly 60% market share in sheets and 45% in towels. So this actually reflects, the global shift towards diversifying the sourcing basis and the confidence that the global retailers place in the Indian manufacturers. Plus, the industry has been, or the companies in this space has been investing in cost optimization, in operational excellence, backward integration, as well as in green manufacturing, as was pointed out by Arti in her presentation. And to maintain and build this competitiveness, Indian home textile exporters are adopting various strategies. First would be strong focus on value addition and innovation, such as developing sustainable product, traceable product, uh, performance enhanced textiles, which differentiates India offerings from purely commoditized products. Secondly, there is also an emphasis on deepening the partnership with global retailers, especially in the US. Expanding the private label program and increasing, play into the branded game to enhance the stickiness with the customers, despite, the aggressive price competition that we see in this sector. So, according to me, India has cemented its place in US in providing quality products in your, we call it the better and the best category, which is the mid-premium and premium segment. India generally doesn't play in the good segment, which is the opening price point. So there we have cemented our position at competitive pricing. And, this augurs well for us to continue to command the higher share in the following years in US especially. As far as companies are also right now diversifying their export markets beyond the US. So focusing on opportunity in UK, EU, Japan, Middle East, and Australia because of the various FTAs that we have signed. And the announcement of the India-UK FTA is a pivotal moment for home textile industry for Indian players. So I think India is poised to take a higher share both in US as well as in UK and other countries as we go along from here on.
Right. So, Ankit, continuing with this discussion on cotton versus synthetic, India obviously has advantage in cotton, but there is a inherent disadvantage in synthetic textiles. So, in your view, what are the measures which can be taken in order to increase the competitiveness in synthetic textile exports as well?
Yeah, thanks, Pulkit, for that. Yeah, so I think before I answer that to your earlier question, that where will the growth come from? The industry is holding on, but where is the large chunk? So suppose if we were to go 2x from our current volume of sales, can we do that in 5 years? Answer is yes. Can we do that only in cotton? Answer is no, because we are already at 60% in terms of our share, in the US. And if you take an overall, so we are already leaders. So that is where it is. Now, that brings us to the question on the man-made fiber. I'm using the term MMF because man-made fiber, because that includes, mostly it's polyester, but it includes everything else. Now, if China plus one basically doesn't have to play out in cotton, it's already played out in cotton in the last 10 years or so, and we are already leaders. China plus one has to play out in synthetic, which is man-made fibers. Now, across product categories, whether you take sheets, towels, home textiles, which includes floor covering, curtains, cushions, everything, you name it, and all those products made out of synthetic, is where the volume growth will kick in. And that is where even the customers, the top 5 retailers of the world, are actually struggling to get capacities in India. And it's basically a chicken and egg. The suppliers would want some kind of a commitment from the retailers, to put up a large investment ahead of time, and to basically go through the gestation period. And the retailers would obviously not have a written commitment, because they would say, okay, once you're ready, we will buy it from you. So this is exactly where we are. This is one. Second is that if you ask me the price of basic polyester yarn today in say in Gujarat, which is where the polyester hub is, versus in China, there is a difference of about 12 to 14%. If I procure polyester from a local textile mill in a polyester spinning mill in Gujarat versus a Chinese guy buying it from China. Now, there are structural reasons for this. That first of all, we have in India, the supply of the key raw materials of polyester is basically with a couple of suppliers, and one being most dominant in that segment. We all know that the largest refiner in the country. So basically, they have their own break-even points and pricing methodologies, because of which the basic price of the two chemicals, which is PTA and MEG, is slightly higher than the global price. Now, because of that, by default, at the RM stage, you are expensive. If you import it from China, you have 6.6% tariffs in India, customs, plus you have your freight costs, and you have your other, aspects, like there are non-tariff barriers. So because of that, every product that India has to ship, which is man-made fiber oriented, has an inherent raw material disadvantage. Now, how this will go away? The only way way it can go away is that as India consumes, say, 8 million barrels a day crude from 4 million today, the next 4 million barrels, which definitely will come in the next 5-7 years, are not going to be refined by the same players who are refining it today. It will be refined by most likely IOCL, BPCL, HPCL, who obviously are also investing in downstream products. So with more supply, this gap should kick in. So that is the very long answer to it. But the problem remains, which is why the delta of the tariffs between India and China needs to be on a higher side of 15%. So if India is 10, we should or India is 15, China 30 would be a perfect scenario to answer your question, basically, on a long-term basis.
So, Ankit, just continuing with this discussion, do you feel that PLI has really benefited India in terms of synthetic home textile?
So, the PLI scheme was announced in 2020 along with the Atmanirbhar series. So that time there were only two policies in it. Very quickly, I'll tell you. One was a 100 crore investment. Second one was a 300 crore investment. And this was an investment linked PLI. And the key criteria was in 2 years, your revenue should be 2x. And the second criteria was every year you need to grow 25%. Now, practically with my senior colleagues on the panel, we all understand that textiles don't work like that. In 2 years, you can't get 2x turnover and things like that. So that scheme basically had to be redrafted. What I last checked was that the PLI 2 for textiles is yet awaited. I think the government may be looking at all the FTAs to get concluded prior to announcing a PLI. But yeah, I think it's desperately required in whatever shape or form. And it should be more granular rather than, a large investment requirement. Because only the incumbents are going to invest. I don't see any new player entering textiles.
Okay. Mr. Muralidharan, one of the most debated issue currently is on US tariffs. So Uh, how do you see the industry gearing up for that, and what are the challenges, or what are the challenges you feel like industry can face going forward once the tariff comes into effect?
So one good thing is the tariff is for all now. So
Right.
it's not singular. So
Okay.
we need not be worried about tariff as affecting only the Indian industry.
Hmm.
There could be some variations in terms of steel, aluminum product categories, but cotton textiles or textiles as a industry,
Hmm.
we are all going to be saying, and for globally, since everyone is going to suffer some tariffs, at least the minimum tariffs has been defined as 10% now, which we are in at this point of time. So industry is, this is a new thing for industry, consumers as well as the buyers. Okay.
Hmm.
The entire supply chain is going to be affected by this. Um, I think we all have to, sit together and, find a solution mutually, which is good for the consumers ultimately. The consumers will continue to buy. Uh, it's between the industry and the buyer who have to, adjust to whatever it is. Ultimately, some portion will go to the consumers also. It's not that nobody is going to be left out of the channel. So, uh, you know, one thing for sure is that the industry has to pull up its socks to get you know compensated for this, whatever share probably will be passed on to the industry.
Hmm.
Uh, so it's not a knee-jerk reaction. It's going to happen over a period of time. Uh, Even the price adjustment is going to sink in over a period of time. It's not going to be that if some share passes on to the consumers, it's going to be the whole or part or whatever is going to happen at one stroke. So we need to adjust to the new regime now. I would say new order of business. Um, I think over a period of time, everyone will find their feet in the changing order, so to say.
Okay.
Everyone will survive. Demand will continue to grow. People can consume because the economy is a consuming economy, consumer economy in any case. So it's a pure an adjustment now. It will take a while, but I think for the present, yes, there is more of uncertainties. I would say that even if somebody has to say that okay, you are at 10% for that's it, then I think the industry would play out much better. But
Hmm.
we don't know tomorrow what is that 10% going to be, and what are the add-ons which are coming, for what reason we don't know really. And
Hmm.
it's all more of a unreasoned way of hikes basically. So uh, uh, I hope the government of India negotiates on a rational basis, I would say, to see that we are all our industries are protected in any case. We are not afraid of tariffs or increases, basically.
Okay. But just wanted to understand from you, Mr. Muralidharan, like how the big retailers are behaving in current situation. Are they in a wait and watch mode, or they are placing orders just like earlier? Mhm.
So I think two parts to be answered here. One is that in the initial stages, April, May, there was pure uncertainty. Buyers were not knowing what to do. Even
Hmm.
as vendors, we were also not clear as to what's going to happen. Okay, that was a period. Uh, April was a tough month, so to say. May saw some advancements. June still better. This one is there. Site is available as far as the order shipments are concerned. We are will become normal over a period of time. Uh, some delays in April, initial May, but I think things would I think fall in line, I would say.
Okay. Yeah. Uh, Mr. Sanjay, in the last couple of years, what we have seen that industry faced several headwinds due to geopolitical tensions, supply chain issues, and currently with the US tariffs.
Correct.
What steps you feel the industry has taken or will take going forward to make itself more resilient against such shocks?
So as my friends have also mentioned, and Arti had also mentioned, so we will have to continue to understand that this is the new normal, and these shocks will continue to come. And so how do you guard against these? A- and that is through cost optimization. So you have to continuously look inward to see where you can have cost rationalization done and do that. Have operational excellence. How do you get the same volume with lesser number of people and lesser costs? How do you integrate more and more and to remain competitive? So this is going to continue. These shocks will continue to come. We saw the Red Sea issue impacting the ocean freights last year during most of the year last year. Then cotton prices, it gone down, but now it has come, it started inching up. And so you have to have that process within the companies to ensure that you are able to take those shocks and are able to come out clear winner out of these. And um, so yeah, that is the process that you have to continue. There is, you cannot pass it on to the customer, and it is not a solution to get down in your profitability.
Okay, okay. Uh, Ankit, coming back to you, like recently we have entered into FTA with UK and maybe FTA with EU also is in pipeline. So just wanted to understand from you, like what kind of opportunities this FTA can throw for home textile exporters.
Yeah, so I think as the slide which Arti showed mentioned that India share to in UK's share from India in terms of imports is not very high. We are, I think, on number 3 or number 4, and the leaders there is Pakistan and Bangladesh. So I think this FTA should definitely open up opportunities for the Indian textile companies to grab a larger market share in UK. Definitely, I mean, but here I would say that it's not like the US. So while we have an FTA, I'm sure even Pakistan and Bangladesh will negotiate a similar kind of a deal. So I don't see, to be honest, I'm not very bullish about the UK FTA. But yeah, definitely it's a positive sentiment. Something is like this, it is better than before. I would put it like that. But it's not like a game-changing thing like it is for the US. That's my view on this. Just to, if I can take a minute to answer the earlier question,
Yeah.
Mr. Murli covered well, but I just add one point. So say assuming a tariff is 10%, for example, or say 20%, just for everybody's sake. And any product, whether it's bedsheet, towel, bath mat, or any other product, typically a markup would be between 2.5 times to say 4 times. If you're a good retailer, you do 4 times markup. So if I am selling something at $1, for example, FOB, it'll be sold at $2.5 by the retailer. Now the tariff, if it's 20%, it's going to be 0.2, like 20 cents on my $1. So on a $2.5 selling price on a lower side, it's only about 8-9%. And on a $4, it's only about 5%. The net price increase to the consumer is only going to be about between 5% on a higher side, on a very high side, assuming the tariff is 20%. If it's 10%, then obviously the numbers change. So, it is not as big an issue as, as everybody is thinking of, number one. Number two, the inventory reduction initially that has happened at the retailer level, that is an obvious fallout. Because obviously when you have uncertainty, you try to consume what you already have and try to, reduce. So that is just a temporary blip, we feel. And third, that, the move away from, so apart from the issue around the tariff, the focus on moving away from China has been reinstated in every retailer's board. Every top management member of the top retailers has been given this as a mandate. So I think, all in all, it is a net positive for the sector. And between cotton and obviously man-made fiber, the 80-20, I would say, the incremental growth needs basically will happen at the MMF stage, which requires a lot of work in terms of adding capacities.
Right, right. So we'll pause for the moderated panel discussion and take up the questions from participants.
Sure.
I would request attendees to please key in their questions in the Q&A panel. So first question is on domestic market. What is the outlook on domestic market, and do you feel that domestic market can be a game changer in years to come? Mr. Sanjay, can you take this question?
Yeah, Pulkit. So on the domestic front, the outlook for home textile remains structurally positive. This is purely driven by, as was pointed out earlier, by higher per capita income, urbanization, premiumization, rising disposable income. And also, on home improvement and lifestyle choices that people are making. So we are witnessing a rapid organized retail expansion, both through offline channels such as specialty and large retail formats, and also online marketplaces. So this is driving branded home textile penetrations, which has historically remained under-penetrated, compared to the global benchmarks. Organized retail in India for home textile at least is roughly only 20% of the total market. But we think that this is expected to grow at 1.5x of the market growth to take a larger share of the pie. And the overall market is expected to grow in the range of 8 to 9% in the medium term. So, within this, we are seeing that with the mid and the premium segments are still seeing higher growth numbers. And most of the companies in this industry are investing in direct to consumer channels and brand building to capture this shift. So we think that domestic market is going to grow well, and more so for the regulated industry, for the organized retail, and it's not going to give very high growth, but yes, it is going to give a decent growth for the future.
Okay. Ankit, next question, if you can take next question is, government has taken various steps for promotion of textile industry. What further policy support or trade facilitation measures would help expedite India's growth in the home textile sector?
Yeah, I think, like I said, that the capex, doing further capex is going to be a chicken and egg. So I think similar to the US policy, which is just passed on 4th July, that 100% capital expensing, that is something which is passed in the big beautiful bill. That's one of the clauses to bring things back to USA. So I think India also had that in the past. We used to do capex expending in 2 years, 50 and 50. Under the Income Tax Act. That will be one. Second, I would say that land and labor reforms. As I think Mr. Mulli pointed out, that the labor code is pending approval more than 3 to 5 years, I think. Effectively, the working hours in India is the problem. You have an 8-hour law, and then the overtime allowance is a problem. So I think we need a revised labor code and social code, which gives clarity to the industry on that. So these two things, apart from this, whatever incentives are there, they should be reviewed and brought it in line with the global, basically with the Chinese setup, because you're competing mainly with those guys. So I think these three things are required on a top priority. For now, I mean, we are still awaiting PLI and Mitra announcements. Mitra was very crucial because it was basically the government has managed to acquire 1,000 acres of land in 3 parks across India. One is in Gujarat. It is very critical because it allows you a processing capacity, which is very important for textiles. Both my colleagues will understand that importance of that. So that processing is basically a red zone. So these crucial things need to come together if we have to grow.
Okay. Okay. So for paucity of time, this is the last question which we'll be taking. So Mr. Muralidharan, if you can take this question, the question is, with rising automation globally, is there a risk of India losing its low-cost labor advantage in home textiles? And how are manufacturers preparing for this?
See, the technological advancement has its own costs, basically. Okay. So the investment cost would go higher. In our case, Indian textile industry has been good enough to support the needs of our growth. Technologically, also India's textile machinery has been upgrading themselves. I think the answer is there. You know, India is looking at employment as a key driver, basically, of the industry. Elsewhere, where you don't have qualified people to work on, investment in technological machines advancements would be of would matter, I would say. But in India, I think still with upgraded machines which we are importing and using whenever this one is giving a proper edge in terms of our products which we manufacture and export. So our industry structure will remain hybrid, uh, both upgraded technology as well as the labor growth, employment growth, as what we see. The best part is that uh, the upskilling of labor is what is going to make real sense if it happens on the ground, and if the labor becomes more efficient.
Okay. Okay. Thank you, Mr. Sanjay, Mr. Muralidharan, and Ankit, for your insightful views. It was a privilege to host you all. I will now hand over to Mamta to give concluding remarks.
Thank you, Pulkit, for moderating the session and Arti for your presentation. Once again, we thank all our guest speakers for their insightful views. It was a privilege to host you. And lastly, thank you to all the participants for taking the time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestions, please write to us at the feedback mail. Goodbye for now. Requesting the tech team to kindly log off.
Thank you to all. Thank you to the participants.
You're offline.